Markets seem to be leveling off this afternoon as everybody awaits the CPI coming out tomorrow. And the expectations are that it's going to run a little bit hotter than last month, but not too bad, just maybe up a little bit. And if that's the case, then obviously the Fed's right now, their narrative is to stay the course, higher rates for longer. The minutes came out today and nothing new there, no surprises, just higher for longer. And obviously what we're seeing right now, cash is king again, as money managers are in no rush to embrace risk with the Fed raising rates. There's a lot more work to be done with inflation. Energy prices are up, gas prices are up, food is up, labor costs are up. So inflation has not peaked necessarily. It's somewhat plateauing, a little bit up, maybe a little bit down in some areas, but it has not let up. It's not going to come down real fast anytime soon. It's a lot stickier than what the Fed was thinking, and their soft landing is narrative has changed to a slight crash, which I think what's ultimately going to happen is the plane's just going to blow up in the sky. So we've gone from soft landing to crash landing to it's going to blow up in the sky. That's kind of where we're at right now with the risks out there in the credit markets, the bond markets, and zombie companies that need to refinance debt to keep operating. So let's take a quick look at the charts here. Not a whole lot going on. Markets are pretty flat right now with about 45 minutes to go to the close. This is Bitcoin here, still hanging on to that 2017 high. Interesting thing was this trend line that I've been watching, it kind of worked its way down that trend line, and it's found a little flat spot here. So we'll see what tomorrow holds. If the CPI comes out somewhat as expected, markets might get a little bit of a relief rally, a little bit of a bounce. Been working after this pump here a few days, it's been down. Let's take a look at the traditional markets. This is the Dow. Let's take a look at it on the weekly. The Dow is below the 200-week moving average, lost it the other day. The NASDAQ is below the 200-week moving average, but the S&P has found support on the 200-week moving average. And so the question is that going to hold? And of course, Bitcoin is still below the 200-week moving average, holding support on the 2017 high. The question is, will that hold? If markets take another leg down, which they're likely to do, then Bitcoin is most likely going to lose this level. And it's, obviously it's being propped up artificially. That is not, organic retail buying that's keeping Bitcoin alive. It's market makers, it's exchanges, and spoofing that's keeping the price up. So once we see where the markets are, which, the markets could find a little bit of a bounce here before continuing on to the downside if the inflation print is not too terribly bad. NASDAQ's been down for several days now. So that is definitely due for a bounce. So is the S&P. If it comes out really hot, markets might continue down a little bit, but markets are already pricing in here over the last week or so what the Fed has to do in the moves. What the markets have not priced in is earnings, which is the next shoe to drop on Friday. So if you get a hot inflation print, and then you get poor earnings report coming out at the end of the week, banks are going to start reporting based on that news and those earnings, and then we get more earnings coming out. That could really affect markets both ways. If the earnings are bad, markets will definitely start taking the next leg down. If earnings are good, then we might get a nice little bounce and could start potentially putting in a bottom here, since we know what the Fed is going to do. If inflation looks like it's tabling somewhat, it's still high, it's still very punitive, and it's still damaging and to the economy. So the Fed has to get it down regardless of what the IMF says, regardless of what the investors, investment managers, fund managers are, saying to the Fed, like Kathy Wood, begging for them to stop. They're just going to stay the course till they get inflation down because they don't have any choice. So here's the VIX working its way up to that 40 level. And the Dixie has continued its climb back up to see if it can get past this 114 level. And oil has dropped a little bit here the last few days after its climb back up into the $90 range. So these things are all weighing on markets as we move along. Ethereum back about working its way back down to test these June lows as well. And of course, if Bitcoin's down, Ethereum's going to follow. So will all of the major altcoins, which actually most of the altcoins are looking less, uh, less attractive or less strong than Bitcoin is right now. They're looking less stable, I guess is the word I'm looking for, as they're already testing these June lows. A couple of them are Cardano, Solana is right there. Matic is still a little bit above, but some of these other altcoins are testing the June lows already. So it'll be interesting to see if they hold up. Here's Ape working its way back down after a nice little pop over the last couple of weeks and months there. So these are the things I'm looking at, and we'll see what that CPI print looks like tomorrow, what earnings look like on Friday. I will be bringing updates, and nobody knows what's going to happen until it comes out. But I think the markets could be setting up for a nice little relief bounce on some decent news, even though everything is still high and the Fed still has to do the work. Can take a little breather in the interim while we see what the earnings look like. So that's what I'm looking at. I'll see you in the next video.